Moving now to the Nigerian market, after 5 uninterrupted days of gains last week, the Nigeria All-Share Index closed up over 38,000 points today, down 0.19%. Now, this was as a result of losses seen in companies like WAPCO, Julius Berger, Dangote Cement, Stanbic IBTC, Livestock, while some of the gainers for the day were GlaxoSmithKline, Nigerian Breweries, Better Glass, PZ, and Guaranty Trust Bank. Now, meanwhile, the Nigerian bourse may be set for a market correction this week as investors focus on profit taking. Now, while others may take advantage of the new entry points this trend may offer, Abiola Razak, team lead at UBA Capital, now joins me for an update on the Nigerian market. Thank you so much, Abiola, for joining us.
It's my pleasure, Esther.
Abiola, can you hear me? Let's just quickly have an update of
I can hear you,
Nigerian
Esther.
Equities market. We saw key indicators muted today, volume still subdued, but then we did see some profit taking. Just your thoughts on what were the key drivers for trading today?
I think the major key driver for trading today is the profit taking. Like you've mentioned earlier, market did gain 5 days in a row last week. And of course, on the back of that, it was technically justified for the market to have a price correction this week. Interestingly, beyond that technical justification for that Easter we saw today, I think it's also very important to note the fact that the consumer goods counters as well as the industrial good stocks are actually overbought. As we speak today, I think fundamentally these stocks are already pricey, and beyond the fundamentals, like I mentioned earlier, technically it's also justified for us to see a price correction this week.
Abiola, I'm looking at the laggers list and I see 3 cement companies taking a hit: WAPCO, Dangote Cement, and Ashaka. Any particular reason why investors took profit of the stocks, or just the normal forces of demand and supply?
I think it's more of a demand and supply, and beyond that, of course, you should notice the fact that WAPCO has rallied significantly over the last 2 weeks. For instance, WAPCO last week gained about 8.6%, and on the back of that, we had expected that that counter is already running above its fundamentals, and of course that's why both technically and fundamentally it's justified for WAPCO to ease at this level. For instance, it traded down to 100 naira today, coming from 108 naira. We had earlier indicated the fact that WAPCO has a PE of around 18 multiple is already priced, and that's why the correction that we've seen today is actually expected and justified. And of course, we still expect somewhat further pressure again tomorrow on that counter.
Now, the profit taking that we saw today, I mean, we're coming from a week, last week, 5 days of uninterrupted gains, and now we're seeing profit taking. Do you think this is going to be perhaps the overriding market theme for the rest of the week, keeping in mind that we have just 3 trading days for this week?
For the entire week, like you mentioned earlier, it's going to be a short week, but for that short week, we think it's going to be bearish. But interestingly, it's not going to be a free fall. I think the major pointer is the fact that some new investors are coming to the market. Yes, the foreign portfolio inflows have not been strong over the last 1 to 2 months, but we're beginning to see some interest again from some new investors who are beginning to look at the Nigerian market at these levels. And of course, on the back of that, I expect that there should be some support for the bearishness that we expect this week. So yes, it's going to be a bearish week, but I think the losses will actually be moderate.
Okay, let's talk about your 5 top stock picks for today, perhaps for the week. I'm looking at your portfolio of top 5 stocks, and of course, I'm looking at 3 different banks here. But you also seem to like Flour Mill, despite that, shall I call it, disappointing numbers that the company reported today, although we did see an increase in its top line.
You're correct, we like Flour Mills, and I must stress that the numbers are not disappointing to us. I think the poster child to Flour Mills' earnings is actually the UNISEM investment, which over the last 3 years have actually been posting associate loss. For instance, in the full year 2012-13 account, they actually reported about 1 billion naira loss on the back of that associate company. Remember, they've got about 28% interest in that company, which of course is a 2.5 million metric tons capacity cement plant in Calabar. I think the losses are beginning to moderate, especially that UNISEM is beginning to ramp up its capacity utilization. They've also fixed a number of operating challenges that we've seen over the last 2 years. So in our own view, we think 2013-2014 will be a good year for UNISEM. We expect them to break even, and of course, once that is addressed, we'll then begin to see some earnings savings. Of course, they'll begin to book earnings on the back of that investment associates company, like I said earlier. Of course, again, we also should begin to see the impact of the sugar refinery, which of course came on board late last year. I think currently as we speak now, we've not been able to confirm the capacity utilization, but our own expectation is that they will just be able to ramp up to about 15% capacity utilization for the first half of the year, and I expect that to pick up in the second half of the year. So we're quite positive on flour mill, particularly from a growth perspective, coming on board the sugar refinery and of course UNSM again, which like I said will break even next year and will begin to contribute to flour mill earnings. So yes, we're positive and the numbers are not disappointing to us.
Well, let's talk about Access Bank, or perhaps particularly Diamond Bank. You're very bullish on Diamond Bank, and you say in terms of exposure to public sector deposits, Diamond Bank has nothing to worry about. And of course, we knew that the bank has gone into the retail space and of course is supporting the SME sector. But some might argue that that's a bit, isn't that too much of a risk that the bank is taking on?
I think I must state from the onset that it's a matter of matching your risk to your returns. The appetite for Diamond Bank to play in the mid segment and the retail segment of the market, I think is good. And I said it's good because of the fact that the margins there are also attractive, quite attractive enough to compensate for the risk they're taking. And if you remember very well, we've always stated that the cost of risk for Diamond Bank will be high. For instance, even in Q1, when they actually booked about 1% cost of risk, we had actually modeled 1.5% cost of risk because we expect them to book more provisions going forward into the year. But of course, when you look at it holistically from the perspective of the returns they're beginning to make on that retail strategy, I think it's good for them. One important thing is the fact that your ability to grow your balance sheet is contingent on the ability of your customers to grow. So if you're banking the growth segment of the economy, definitely that gives you a good leverage to have the opportunity of growing your books going forward, which we've seen in the case of Diamond Bank. For instance, market hasn't actually noticed that Diamond Bank has actually outgrown Sky Bank. For instance, Diamond Bank has displaced Sky Bank to become the 7th largest bank in Nigeria from balance sheet perspective, and I expect that they will begin to pose a threat to ETI, for instance, to gain the 6th position in the market, and of course the market share of around 5% as we speak. I think this is positive for Diamond Bank from the perspective of growth, and of course, in as much as they continue to invest in their risk management frameworks, I think there will be adequate earnings to compensate for the risk they're taking.
Okay, Biola, finally, before I let you go, if we see more profit taken being the theme for the market going forward, what stocks or sectors do you think could present good entry points for savvy investors?
We would like to see some pressure points on Guinness for us to be able to take advantage of that. We like Guinness from the perspective of corporate governance, likewise Nigerian breweries. So we're actually looking forward to Nigerian breweries easing from tomorrow. And of course, if that counter does see some pressure tomorrow, that will present bargain opportunities for us going forward into next week.